It's official. The Fed has hiked rates once again, this time by another 75 basis points. So you know what we need to do next. Let's get to how that's going to affect the housing market and what we might expect next from the Fed. Let's jump into the bottom line. Good morning. A lot of information to go over, including the activity from the Fed and their recent rate hike. Let's start, though, with some of the staples and take a look at application volume and interest rates. So we got the recent application survey. Every week we receive that. This was from the Mortgage Bankers Association, or the MBA. That shows us application volume, and we're specifically looking on the purchase side of things. Purchase applications fell by 1% last week. That puts them down 41% year over year. When we look at mortgage interest rates, those dropped actually a little bit, and this marks a break in the chain of increases to the average interest rate. So we saw them drop slightly down from 7.16% previously to 7.06% on average. Keep in mind, this data from the MBA is going to be based off of trailing information. So it's going to be close to real time, but not exactly in real time. And it's an average. So you'll see some situations where there's rates much lower than the average, and some situations where there are rates that are higher than that average. On a whole, this is about 3.8% higher than the average at the same time last year. Now, let's get to the most recent activity from the Fed, because big headlines last week were the Fed rate hike. That's been a headline we've seen throughout the year because the Fed has moved from 0% at the beginning of this year all the way up to the range of 4%. Last week, as expected, they hiked rates by another 75 basis points. So now the question is, what is the Fed going to do next? And one indicator that we want to keep an eye on is what are other central banks around the world doing? A lot of them are starting to slow the pace of their rate hikes. And so the question is the Fed going to follow that trend and start to slow the pace of their rate hikes as well? Well, we got some commentary from Jerome Powell last week that confirmed a couple things. One, a slowdown is expected to come over the next few meetings, but he did go on to say that it would be extremely premature to be thinking about pausing altogether, and that the Fed still has a way to go, quote unquote. So that's going to be news that spooks the bond markets a little bit because it's not quite the moderation that we were potentially expecting. He also made a very important statement. He said that he would rather risk overdoing it when it comes to rate hikes and hiking too much rather than underdoing it, and that the Fed can always cut rates in the future. So important commentary, not quite the slowdown we were expecting, hinted towards, and we're going to want to keep a close eye on what happens next, because when these changes to the rate happen from the Fed, the markets are anticipating information in advance and pricing that in. So when this most recent 75 basis point rate hike occurred, that's what the markets expected, and they'd already made a lot of adjustments to where things stood for pricing in the financial markets as a result of that. So these hints and indications as to what will happen next are going to move the market. That's why it's important for us to keep an eye on it. Now, Jake, switching gears a little bit, another big topic we're looking at right now is home value, home appreciation. People have a lot of questions right now. What is happening with home value and what's going to happen next? So can you weigh in and give us some data on what's going on there?
Yeah, absolutely, Kyle. So we got some information from CoreLogic, who released their home price index report, and this is for the month of September. And in that report, it showed home prices declining by 0.5%, which drags down the year-over-year appreciation rate per their report from 13.5 down to 11.4. Now, the year-over-year number is still significant, but we will likely see some vacillation on the month-to-month numbers as these reports are starting to come out in the same time frame when the rates really started to take off. Now, CoreLogic also forecasts that home prices will remain flat in October, and they actually forecast it's going to rise 3.9% in the year going forward. Now, that's really important because although we're going to see some negative numbers and readings on the month-to-month reports, they're still forecasting almost a 4% appreciation nationwide over the next year. And now keep in mind, 4% appreciation can still be meaningful for wealth creation. And here's what I mean by that. If we took someone who bought a $400,000 home and say they put 10% down, That means at a 4% appreciation rate, they would gain in that first year $16,000 of appreciation, and over the next year earn a 40% return on that investment due to the concept of leverage. So it can still be a very valuable and profitable investment.
Yeah, good stuff, Jake. It's important to keep some of the context in mind when we look at these numbers. So definitely helpful to get that take on what a lower rate of appreciation could mean for those that are out there looking at making a home purchase in the near future. Another thing that really influences the housing market and whether people decide to make a purchase in the near future is the rental market. What does it cost to rent? Because if someone's going to need a place to live, those are the two primary options, rent or purchase. So regarding rentals, we've got recent reports that indicate this year is expected to be the second fastest year of growth on record. Now, the highest year of growth when it comes to rents on record was last year, 2021. They increased by 18%. So we're still seeing significant increases overall in the cost of rent, and that's a big factor when it comes to purchase applications and what the activity in the housing market is going to look like. Because yes, interest rates are higher, but we need to pair that with where things stand with home prices and also where do things stand with the cost of rent. So a number of things for us to keep an eye on here, a big one being potential future activity from the Fed, what's that going to look like, because that will influence the rest of the market. So we'll continue to keep you posted as we have new information each week. Make sure to tune back in. We'll see you next week on The Bottom Line.